It's looking
Yep.
great. A few more minutes. We'll let everybody get situated. So Rebecca, have y'all spent any time there? I guess you were moving in. Have y'all spent any extended time there yet? Are you there now?
No, I'm here in Houston.
Right? Okay.
Yeah, I'm in Houston. But we did spend the holiday season up there, and then we spent spring break. So a total of 3 weeks.
Because I'm supporting you, but you weren't mean, you didn't push her too far. I think
I'm not seeing who might be talking.
Who?
I'll make sure. If you would all mute yourself so that we don't have the background noise. I'm trying to do it on this end, but I may be missing a few. Very good. Rebecca, does your husband have a business? What does he do?
So he supports me in my business, and then he is an investment individual for a biotech company. He does IR.
Okay. So you're both able to work remotely for the most part. I know there's some things you're having to go in for. So
Yeah.
Nice. So you can live basically anywhere.
Yes.
Like that.
And I was talking to a person from Goldman Sachs, an investment specialist from Goldman Sachs. Yesterday, we were interviewing together, and she was sharing with me that she was in New York, but now that everything's virtual, she just decided to move back to Houston. It's like, big difference, New York to Houston, right? That's a big difference.
For sure.
I'm going to go ahead and put up our logo slide for the entrance, if that's all right.
Absolutely. And then here in just a minute, you can get started, Brett, and then others could just continue joining us as we get started. And if everyone, just remind everyone, if you'll please mute yourself except the one speaking, that'll help with the background noise as well.
Very good.
I've got 2 o'clock on my watch, so if you'd like to get started, we can get this party going.
Very good. Well, we'd like to welcome everybody today to the Paycheck Protection Program latest updates. My name is Brett Augustine. Hopefully you can see me here in just a second. Oh, thank you, Lori. Brett Augustine, I'm a recovery business advisor for North Central Texas Small Business Development Center. We are the leading provider for assistance for small businesses and, of course, grant funded, which allows us to offer these services at no cost. And one of the hottest topics in town probably right now is the PPP, latest updates that we're talking about, which is the Paycheck Protection Program. And with that, we're going to be leaving some questions in the chat room. Please feel free to mute your mic on the way in, if you would, please, so that we can pay attention to Miss Rebecca. Rebecca, I apologize. Rebecca Schultz, right? That was a hard name for me to say there. It was my first time, guys. Rebecca Schultz has helped many individuals and business owners across to gain access to money and financial education, and is for over 25 years. And she helps them reach their goals through that. She's also the founder and executive loan consultant for Cinder Block Funding. And if you would please help me welcome Rebecca, I would appreciate it. Rebecca, I'll leave it to you.
All right, thank you so much. All right, it's really nice to be with you guys today. And there's quite a bit of movement happening in the PPP world, right? So we're going to go over exactly what's happening and hopefully answer some really important questions that are on the forefront of everybody's mind. Now, as we go through the presentation, just know I'm going to be blending in all those years of lending or access to capital into the conversation, right? But I am a professional lender or banker by trade, not an accountant, not a tax advisor, right? So as I'm speaking through the material, it's my experience with SBA and lending that's coming through. Okay, with that being said, this is me on any good day, okay? When PPP is your life, right? You can't see straight right now. There's so much coming down the pipeline at us. And that would be for any of those PPP lenders that are really live on the ground trying to implement the product to make sure people are not left behind. So with that being said, let's go off into today's agenda. So we're going to go over the important updates. That is live, what that conversation is. What are those key pieces of updated legislation that we're wrestling with, trying to get into action, all right? There's quite a bit that's on the forefront that we're trying to see kind of come down the pipeline and put it into place to help people. But we're going to go over that. Then we're going to kind of take sections of the conversation of the PPP program one by one. The first is going to be for the PPP initial loan request. So the initial loan request is the first loan. There's quite a few small businesses that have not been able to get any PPP funding right now. So I like to slow down and really take those conversations with borrowers live and kind of put them into play to try to help answer a lot of questions for businesses that might have found some roadblocks. My whole intent with that is to get rid of those roadblocks, right? Shed some light on some of those conversations that we're hearing, and hopefully draw connections to help people get through the application process to get the loan. Okay, so that's the first one. The second is going to be the second draw. All right, so businesses that maybe got their first PPP loan are able to come back and get a second if they can show that they need the funding to survive. All right, so we're going to talk about the PPP second draw and some slight changes to the program around it. Okay. And then regardless if it's your first PPP loan or a second PPP loan, all of us meet in PPP loan forgiveness. All right, so we're going to talk about forgiveness. We're going to dissect that. What does that look like? We're going to go through the forgiveness applications and all of the new questions that have been raised since now that there's a second loan program and there's, new forms that need to be involved. What does that all look like, right? So we're going to demystify that for you. And then we're going to end the presentation on important details to remember, right? So culmination of what we've gained or insight from the program. We're going to end on that. Does that sound good? Okay, let's go. All right, so here's your update. So we know that the Coronavirus Relief Act, also lovingly called the Economic Aid Act, extended the PPP program, which up to this point in time had ended, right? So they came back at the end of last year. So going into 2021, they refunded it. So $284 billion was pushed into this fund to allow for businesses that had not yet received it, as well as those that needed the support, that's the heaviest hit businesses, could come back to the well and get that type of meaningful cash flow to keep operating. Now, it's important to note that the intent of the program from the very beginning was to reach businesses that still needed the support, but were small businesses that couldn't survive without this type of cash flow intervention. And so they put aside, right, and they set aside funds specifically for certain categories of businesses, primarily going to be first-time borrowers or small businesses with 10 or fewer employees, loans that were under $250,000 in size, so again, small businesses. But they also put in a nice big chunk of money for fraud and audit mitigation, okay? I always point that out because anybody who takes government money during this time frame needs to be aware that the government is auditing and they're looking at what's happening with the funding. ensuring that businesses are using the funds properly. Okay, so as we go through the presentation, I'm going to do my very best to try to educate and guide you in a manner that's going to allow for you to find full forgiveness, right? Or at least be able to document in a strong manner to outweigh any type of audit situation that could come down the barrel. And by the way, just before I got onto the presentation today, I had a long-standing business owner that has like 18 individual businesses within a franchise reach out to me and say, oh my goodness, Rebecca, I just got an email. They're auditing me on my PPP. Okay, so it's out there. It's happening. Doesn't matter how big or small. So we're going to try to get you ready. But ultimately, there are still funds left from when the program was started at the beginning of this year. So here's the breakdown, right? So we know that the Biden administration early in February wanted to go ahead and slow down the pipeline and make sure that those businesses that were, 20 or fewer employees, right? Minority businesses, any of those first-time PPP borrowers that weren't able to take advantage in 2020, they wanted to push those people to the front of the line. And so they did so by streamlining the application process and trying to take any of those larger businesses, right, kind of to the side and give a 2-week period of time for the smaller businesses to come forward. They did a great job, right? If you were to look at the numbers from before, you would see huge differences between the first PPP loan and the second PPP loan draws, right? Now it's starting to even out. We're getting to those set asides, but there's still $60 billion in funding left. That's where we are, right? So we have now until the end of May 31st, they extended that deadline to try to get those people through the process and get them some funding. Now, with that being said, just last week, we were at 72 billion. Okay, so we have given out 12 billion in a matter of 1 week. I'm just going to tell people that if you are standing on the cusp of deciding whether or not you need to borrow, or you're not quite sure if you need to push hard enough, I don't anticipate the funds to last all the way through the end of May. I anticipate the funds to go fairly quickly. So we want to make sure that you're getting the support that you need now.
Mike Palace, Monaco.
With that being said, okay. With that being said, some of the recent changes to try to make sure that the money goes to those that need it the most include changes in the amount that sole proprietors, independent contractors, and self-employed individuals can borrow. All right. So I will walk through this conversation in great detail. I'm going to bring up a Schedule C, which is typically used to calculate these loan amounts. And I'm going to show you those differences for what they just passed, these recent changes in legislation. So you'll be able to see that for yourself, but just know that they're really trying to get money to those that need the funds. They've also loosened some restrictions for business owners that had prior felony convictions. Now, if you had any financial fraud convictions, well, they're still going to be tough on you for that, okay? But if it was other old school stuff, right, that happened years ago, then they've tried to loosen that to try to help more businesses. Outside of that, any business owners that had delinquent federal student loans, right, they were originally barred from being able to participate in the program. Well, they've loosened that requirement up just for the delinquent federal student loan side, as well as any business owners that might not be U.S. citizens, but have a ITIN number here in the United States. Those ITIN numbers now can be used and they can join the PPP party, okay? With that being said, let's dive into the first topic, which is going to be that initial loan request. So some businesses still haven't been able to get the support, right? And why? A lot of it is tied to the type of financial reporting that they're providing to the PPP lenders, right? As well as to what they've provided to the IRS. So I'm going to do my best here as a banker to try to walk you through some of these little, I would say, roadblocks, right, and try to figure out a way around them, because there is a really good conversation for those that maybe haven't gotten the initial PPP loan yet. All right. With that being said, eligibility includes small business owners. SBA defines that as 500 or fewer employees. You would have to have been in business on or before the date of disaster, which is stated as February 15th of 2020. Now, going into the application process, they are no longer asking you for proof of payroll in the form of payroll processing records. That might be shocking for some people, but they've gotten a little bit more clever. They're trying to avoid any type of fraud, right? So what they're asking for you to show is going to be either your 2019 or your 2020 tax information to verify or document your payroll records. And that gets a little tricky for some of the smaller businesses, right? For instance, your S corporations, or maybe your limited liability companies or LLCs that were reporting separate business tax returns from the consumer and primarily providing a K-1. They have been left out of the conversation largely. So that's where I'm going to try to focus at the end of this little section, some love and attention on how I've seen business owners kind of get around that type of scenario and find support. Okay, so I'm just going to draw the connection to that we need to provide 2019 or 2020 tax information in order to justify the eligibility for the loan amount. Okay, they've also kind of given us this little foothold to say business owners that might have rapidly tried to pay off their PPP loan from 2020, but then later found that this pandemic lasted longer than they thought, right? That they could come back and try to get additional funds or modify the original loan and get back the money they had prepaid. So they made that little clause available for them. They also opened up the PPP program to a few more business entity structures, which I'll talk about in just a minute. All right, with that being said, right, what does this whole loan term look like? What does this amount and loan term look like? Well, the maximum amount that any one borrower can currently take under the program is $2 million. That's the threshold, that's the top. Right? And the amount that you would individually qualify for would be 2.5 months of average monthly payroll costs. Right now, the average monthly payroll costs, we'll talk about how you figure that out, but they're essentially saying take payroll for either 2019 or 2020, right, for the year. You would divide that out and figure out what the average monthly payroll cost is, and then multiply that by 2.5. Sole proprietors, independent contractors, and self-employed individuals, well, they didn't find a whole lot of support under the program back in 2020, primarily because of the way they were calculating that owner compensation, right? Now, they corrected that going into 2021. And just recently in February, we saw where they really did a good job trying to make sure they were providing meaningful support. And so again, I'll connect this conversation to gross income to the actual forms and calculation, all right? You'll see that in a minute. Just know that it's a considerably big or improvement over what they were doing before. All right, so this is a loan, right? It's a forgivable loan if you follow all the protocols and you file the paperwork, right? That's the government for you. But it is a loan and the initial interest rate is 1% APR with a maximum repayment term of 5 years, okay, or 60 months. All right, now, to take this money, you have to self-certify that it's a necessity for your business to survive. Okay, so think about the statement. Right, you're going to the government and you're saying, I need you to help me. Otherwise, I'm going to have to fold up shop and I'm not going to be able to operate and I will go out of business, right? This is that self-certification. It's a necessity. And so when you go into the paperwork and you're looking at those statements that you're making to the government, that's one that should make you pause, okay? Now I'm going to connect the self-certification conversation to the forgiveness conversation in a minute. Just note that if you are doing well, maybe even better than what you were doing before the disaster, probably not a good idea to self-certify that you're in a distressed situation, right? All right, so we want to be mindful of that. All right, next, they are stating that there's no collateral requirement and no personal guarantee. Meaning that once you get the loan, there's no lien against your business assets. And if the business fails, there's no personal obligation for you to pay that money back. That sounds really great, right? A lot of people would sign up for that. But I'm going to connect this again to that forgiveness conversation and point out that even though there's no collateral or personal guarantee, there is still a strong requirement that those that sign on that dotted line and connect themselves to these applications, they follow through with the documentation requirement and the forgiveness requirement. They hold on to this information for the entire 6 years that they're required to. There's no getting out of this, okay? So even though it sounds easy, not necessarily. All right, with that being said, how do you get a loan? Where do you go? A lot of the financial institutions that were offering the loans started to slow down, if not stop the application pipeline right ahead of the March 31st deadline, right? Because what they didn't want to happen was to have business owners depending on getting that loan approved and then not being able to do a turnaround time to actually close the loan before the deadline. Okay, so they stopped taking them usually 2 weeks ahead of the actual deadline. With that being said, just last week, they extended the deadline to May 31st, right? And so those lenders are now opening back those portals and allowing for new applications to flow, or they're calling people back and telling them they'll continue processing the application if necessary. All right. So with that in mind, I want people to understand if you had received a no before, maybe just a few weeks ago, that might have changed because the extension was given. Okay. So my recommendation for finding a new lender would be to go directly to SBA.gov. SBA has a fantastic program where they link you, LINC link, or they match you. It's like a lender match to a PPP lender in your area or available to support your application. And so you go online to SBA.gov, search lender link, LINC, or lender match, and you'll be able to put in your contact data into that little format and receive a list of PPP lenders that are supporting your area, as well as they will receive your information. All right. So easiest way to find somebody is to get a list directly from SBA or go back to your primary financial institution and talk with them. No matter where you find these people, the rules are all the same once you get the money. You've got either 8 weeks or 24 weeks to spend the funds. All right, we call that the covered period. That's the time the government is covering your working capital, your cash flow to support payroll. All right, so 8 weeks or 24 weeks, you get to choose. It's just one of the two. All right, with that being said, if you spend the money in accordance with the guidelines, we'll talk a lot about the guidelines when we get to the forgiveness portion of the conversation. Then you can fill out this application and potentially see a full or partial forgiveness. Okay. With that being said, I do want to dive into some of the forms. This is where I'm going to connect the IRS records. Remember those tax documents I said were so important now? I'm going to connect that conversation with the actual intake or application, right? It's a little hard to follow, but I'm going to go slow and try to be very purposeful in what I'm saying here, okay? I also want to point out that even though we're looking at a form, and the forms are made available on SBA.gov, a lot of the PPP lenders have gone to a digital format, which will take this information in like an online application situation. And that's fine. You don't have to have a physical document printed out and handed in, right? They can do a digital version, but this at least helps you understand how SBA is looking at the information and what you have to complete or input in to get the loan. All right, with that being said, I'm going to do this one time, okay? Because there is a lot of forms here. There are tons of forms within the SBA just over this PPP program, and you're going to get dizzy seeing them. So I'm going to go ahead and save time by going into a lot of detail one time. And then after this introduction, I'm just going to say deja vu, okay? And that's just going to point that this is the same information on a different form, okay? So you'll remember deja vu. All right, so here we go. At the very top of the form, they want to know what your entity structure is. And although you might find this very, very simple, remember I told you that a lot of the small business owners that are trying to apply for that initial PPP loan are finding it difficult? I have found in my consultations to the SBDCs that this one little area here can trip everybody up. All right, so this is the start of the conversation or dialogue, as well as it's the start of a checklist, right? And the checklist is those forms that SBA is going to require to see in order to confirm that you're calculating your eligible loan amount properly. All right, so this whole conversation over this first box. Right. A lot of business owners will report their financials to the IRS differently. Okay. And in most cases, these small businesses like the S Corps or the LLCs, we call those pass-through entities, right? They will report either on a Schedule C or they might report under what we call a Form 1120 or 1120S. Okay, there's a couple different ways they can report their revenue. They could potentially also file a business tax return under a Form 1065, which is like a partnership tax return. And each one of those tax returns kind of has its own entity structure conversation with the IRS. Where I've seen people fall through the cracks on this, okay, I'm going to connect these two conversations, is SBA is always looking at how you've reported information to the IRS as opposed to how you've reported with the state. Okay, the IRS is how they match and confirm that you are legitimately operating, that you are stating the right information to them. So it's the IRS that we're trying to match. Well, when I'm talking to S Corps, right, or LLCs that have filed a separate business tax return, that 1120S that I spoke about, a lot of those tax returns will come with what we call a K1, right, Schedule K1, where that's where the pass-through income is flowing from the business tax return to the personal tax return. And so what's happened is these business owners are just checking S Corp or LLC, okay? And then they're trying to show their K1s, right? Because that's what they have from the IRS. And that's what's documenting their income, right? Unfortunately, the bankers aren't able to look at a K1 in connection to one of these 1120 or 1120S forms. Talk about confusing, right? And if just to give you a little piece of what they're saying here, is that K1 is a look at the entire income or profit for the business, not payroll. Remember that whole conversation for the payroll protection program is they're looking at the average monthly payroll. You can't get that from a K1. It's looking at all the profitability of the business. Different conversation. All right, so the trouble and the struggle has been, how do I really cultivate the right information on the owner draw or the owner compensation or the payroll for those employees? How do they do that when they're in those entity structures? Okay, and so in a minute, I'm going to show you, right? I'll show you a backdoor. It doesn't mean that what I show you is the final answer, okay? I'm going to tell you it's not the final answer. And it doesn't mean that your accountant did anything wrong, okay? It doesn't mean that either. It just means that the SBA is looking for a specific type of document to verify, without a shadow of a doubt, what the payroll implications are in connection to the loan. And now I'm going to bring that back to this form, okay, in our deja vu. That all starts with which box you select here, all right? So if you're an S Corp and you are reporting under a K1, but you might need a Schedule C for your draws only, you may need to think about how that looks to the IRS and check the right box.
Enter your access code or meeting number followed by.
And so I'm going to connect that to the most recent application I saw where this was the exact same situation. I had an LLC owned by two friends. They were not married, right? Two friends. And they filed a 1065 partnership tax return. and they each had a K1, and they were completely just perplexed as to how they're supposed to accomplish this, right? And so they would go in here and they would say that this was a partnership as opposed to an LLC, even though they had an LLC. Again, they're stating the documentation that they're providing the IRS in that format, and that's what the lender needs to know they need to look at in order to apply for the loan. Does that make sense? I hope so. Now, if you have questions and you feel like maybe that's the reason why you haven't gotten the loan, all right? If you feel like, oh, that makes so much sense to me and you need to talk afterwards, you can certainly get in touch with me or get in touch with the SBDC, and we'll make sure that we give you that independent review to help you with that. I feel like this is the number one reason why small businesses have not yet accessed the support. Okay, now, outside of that box, you're going to put in your doing business as, assumed name, also known as trade name. So if I'm ABC Incorporated and I do business as Beads R Us, Beads R Us is going to go here, all right? And I should probably have that filed or recorded with the county or with the state of Texas as an assumed name. And then it's going to ask for the years established. So what year did you get established? Did you establish in 2020? Remember, if you started in 2020 after February 15th, you wouldn't be eligible for the loan, right? So just be careful you're keeping a mind on this. And I would also connect this year of established to the business start date on the IRS documents. Okay, because remember, the IRS is what they're matching to. All right, next it's going to ask you for your business legal name. This needs to match the name at the top of your tax return. Okay. So the top of the tax return. So for those that are using a Schedule C, that can get very confusing, right? So I'm going to show you on a Schedule C what I mean by this, but this is the business legal name that you're reporting to the IRS. And then it's going to ask for what we call a NAICS code or a business industry code. This should be the business industry code reported on your most recent tax document with the IRS. You kind of get a feel for that. It's all verified through the IRS. All right, then you're going to detail, are you a small business with 500 or fewer employees, or are you using the SBA size standard chart in order to verify your eligibility? So you can go to sba.gov. You're just going to search size standard, and a chart's going to show up. And you're going to search for your industry, what you do. It's going to tell you how many number of employees you can have, or your gross average annual revenue size in order for you to be eligible as a small business. Okay, so you're going to check that. Then you're going to list a good business address for you to be contacted at, the tax identification number that's reported to your business revenue. Again, that's going to be answered by looking at your tax return. And then a phone number, primary contact name, and email address. Whew. That is your very detailed explanation of the deja vu box, okay? Below that, this is where you start to self-certify your information. So just going back to that conversation, remember the lender doesn't tell you what you qualify for here. Okay, that's confusing. A lot of people think they do. No, you are telling the lender, you're certifying what you qualify, and all the risk and responsibility of borrowing too much or too little is on you, okay? Big responsibility. So in this case, you need to know what you're picking up, right? Where you're getting that information, and make sure that it jives with what they're able to read and interpret. And that's what the bank's doing. They're looking at what you're giving them, and they're kind of looking at it saying, yeah, I can use that. That's tax data, right? Or it doesn't align. I can't use that information. They're just confirming what you've given them. But you're going to figure your average monthly payroll, and then you're going to multiply it by 2.5, right? 2.5 months. And then over here, you're going to list your number of employees. Now, I wish it was that simple, okay? Number of employees is a much more complicated conversation, right? And it's one that I'm going to go into a lot of detail with over in the loan forgiveness section. And we're almost there, right? We got to get through this section. So just note when it says number of employees, it's actually asking for what we call full-time equivalency headcount, also known as FTE. And this would be FTE correlated to the average monthly payroll that you've just estimated. Okay, so 2019 or 2020, right? Those are the tax forms we can use. You're tying your FTE, number of full-time equivalency employees, to that payroll that you're getting support for. I know. This is the stuff, right? This is the stuff. So we're going to get to that in a minute. I'm going to walk through how you calculate the number of employees and what you need to be thinking about. But down here, this is like a tricky box here. Okay. It doesn't look tricky, right? But for those first-time borrowers that maybe are just joining the conversation of this whole PPP world, right up front, know that 60% or more of your PPP loan funds need to be spent on payroll in order for you to be eligible for full forgiveness. Okay, so this is the Paycheck Protection Program. So you must have to select this payroll box here. Okay, that's a must. And then any of these other boxes you could select as well. Just know that if you decide to use another box or another use of funds within your realm here, okay, before time's out, you can certainly do that. You can do that as well, all right? It's just up front, you definitely need to check that payroll box. And outside of that, you're going to list all the ownership with 20% or greater ownership. They technically want you to list owners all the way up to 81% or greater. Right, that's technically what the government wants. And then below that, they're giving you this demographic information. And note how it says optional, but I'm going to tell you they really want to collect this information. You saw before where I gave you that little update from April, just last week, where they were trying to make sure that they're reaching the people that have historically been left behind, right, or the small businesses that need the most support. They're really trying to get this data, right? So they put this off of the back page up to the first page, right? So that's important to them. And with that being said, page 2 are some really important qualification questions. So just go slow and read through them. Make sure you're answering them correctly. If you check the wrong box on any of these, you will immediately get denied. Okay, so just know that. And then as you move on to the last page here, woo, see all that tiny print? You need to read it, okay? So that tiny print is all that self-certification that you're telling the government that you have read and you're going to adhere to. They even make you initial how you're going to use those funds, right? And then you sign that dotted line. And I already warned you up front, there's no getting out of this, right? So once you take the money, and you sign saying you're going to use it in this specific manner and you're going to document it, there's no getting out of it. This is where the penalties come in if you try to misuse it. Okay, so that's the first form. Now we're going to go faster. Okay, so this is a form that looks very similar to what you saw, but this is for those Schedule C filers. Okay, now when I zoom in and I talk about the Schedule C filers, look at this little entity box that we talked about before. It's way simplified, right? Because there's only a few groups of people that can use the IRS form or Schedule C, right? It would fit within these categories: the sole proprietor, independent contractor, self-employed individual, single member LLC, right? And then qualified joint ventures. Remember those 1065s I was talking about, those partnership records? These are the only people that can use the Schedule C filing. With that being said, deja vu, okay, you're going to pick your tax year. You're going to get your Schedule C in front of you, and it's going to walk you through exactly how to calculate your PPP loan amount. It even tells you what line on the form you're supposed to stare at and put the data entry into, okay? And then it says divide that line by 12 to get an average monthly payroll, and then multiply that by 2.5. I'm going to state right here where it says $8,333.33. That seems like an exact number, right? It is, because there is a cap on how much you can consider for the loan for any one employee. Okay, $100,000 annually is the maximum amount per each employee that can be calculated into this PPP loan. And so if you took that $100,000 amount, right, and you divide it by 12, that would be your cap. That's how they got that number. All right, so that's the first set of boxes. But let's say you file a Schedule C And you also have W-2 wage earning employees. Okay, and that's showing up on your tax return as well, your Schedule C. Well, they have a separate way for you to calculate your other wages, right? You would again follow the line 7 minus line 14, 19, and 26, and then you would be able to come up or calculate your original PPP loan amount. Okay. The rest of the form is exactly the same as what you saw before. That is the only difference. Now, if that was a little confusing as I was talking about Schedule Cs and talking about tax documents, I wanted to give you like a visual, right? Because it's one thing to see it and then to be told it. So now I'm going to connect that information for you. So remember, on that original PPP application, I spent that time talking about all those little boxes and how you needed to connect the application, the borrower, to the IRS records. And if you picked up the wrong thing, they couldn't find you. It was all about matching. Okay, so let's use Minnie Mouse's business as an example, okay? I don't know if this is her name of her business, but I made it up. But anyways, we've got Minnie Mouse on the Schedule C, right? Here's her social security number. She owns a retail clothing store. Here's that business industry code, that NAICS code that they're asking for. So if you were trying to figure out where you find it, there it is, okay? And then here she reports her business, Mini Me LLC. And here's her tax identification number. Okay. And so this little example, because we're looking at the top of the tax record, we would want to put the EIN number on the application. There would be a legitimate EIN number, and we would put the name of the business, Mini Me LLC, on that application. Okay, make sense? Now let's just guess and pretend that Minnie Mouse just files it under her name. There's no Minnie Mouse LLC. She doesn't have an EIN number. Okay, she is an independent contractor or a sole proprietor. She doesn't have anything like that. All right, then she's going to use her social security number because that's how she's reporting this business revenue to the IRS. And she's going to report her industry code, but it's going to be under her name. It doesn't have to be another name if it's not reported to the IRS. Confusing, right? I know, because it'll say business legal name, and maybe you do business as, I don't know, Shoes R Us, right? But you don't have it formally filed anywhere. It needs to match the IRS records. So in this case, Mini Me LLC, okay, EIN. If that was left off, it would be Minnie Mouse as the business legal name and her social security number. Hopefully that helps people. I see people get that wrong all the time. So, all right, next, let's go back to that gross income conversation, right? Okay. So originally, before last year, actually before, in January even, they just changed this in February, they were telling business owners using the Schedule C, they had to use line 31, which was equal to the net income, net taxable income. So again, line 1 is the most amount of money the business made. After line 1 are all the costs and then the expenses associated. And line 31 was what was left over. Now, the problem with sole proprietors or independent contractors filing a Schedule C is that most of them, right, really for tax reasons, right, they were not showing a positive number under line 31. Okay, I'm not going to say right or wrong. That's just how it works out. It was negative in most cases, right? And so when you go to a loan officer and you say, I didn't make any money, give me a payroll protection loan, right? The loan officer is going to say, you don't qualify, you didn't make anything. But they're like, but I did qualify, right? It was this horrible conversation. So what the Biden administration did is they went back and said, all right, we're going to get more meaningful support. So instead of using line 31, they're coming up here to line 7. Okay, line 7 is what they're able to use. So look at the difference just in here. Line 31 is 21,000. Line 7 is 170,000. Okay, big difference for those business owners. I've had business owners cry. They were so happy. Right? They just couldn't believe it. All right, with that being said, that was the big change that happened on this whole Schedule C. So remember, Schedule C can be used by all different types of industries. They've streamlined this to try to provide more meaningful support. Just remember, if you are an S Corp or an LLC and you're filing an 1120 or 1120S and you're staring at that K1, I've successfully seen business owners with that eligible passive company, the S Corp or the LLC, be able to take the owner draws and separate that, okay, from that K1, and then filter through just the owner draws into a Schedule C to be able to take a benefit of that line 7. I'm not saying that that's what your accountant had to do. I'm not saying they did it wrong. That is just one of the ways that I'm seeing business owners be able to provide documentation that separates out their personal draw or their personal income from that K1 in that very complicated conversation. So hopefully that helps people that are still struggling that haven't gotten the support. What I also wanted to provide to you was a little picture of those 941s, right? So we don't deal with these all the time, right? A lot of people didn't even know they had 941s maybe on their business up until this point in time. But when you have W-2 wages, right? When you've got employees that are W-2 wages and you pull aside some of their federal taxes, you withhold, right? Quarterly, you should be filling out one of these forms, or maybe your QuickBooks does it for you, your accountant, your bookkeeper, whatever. You're going to be sending in a record of those wages and then the withholdings, okay? All right, with that being said, one of the primary documents that they're asking from S Corps, LLCs, C Corps, any business that has any W-2 labor, they're asking for all 4 quarters for either 2019 or 2020. They're looking for all 4 quarters, right? So 4 of these forms. And they're looking at line 2. You add up all of that to get an annual amount of wages, divide that by 12 to get an average monthly wages, and that's how they're calculating your payroll amount, okay? Whew. I know. How do you talk about that and have any fun? You don't. Okay, but we had to get through it because there's a lot of people that needed to at least see it and visit it and brainstorm around it. So for everybody else, thank you for sitting through that. So let's go through the PPP second draw loan. All right, so for the people that have gotten the first loan, used it, right, but still have not seen a huge improvement in their business operations, the economy hasn't come up for them, there is the opportunity to get the second draw loan. Now, there's all kinds of conversations around this right now. So I'm going to go through the basics, and then at the end of this, I'm going to kind of summarize what I'm seeing live on the street, right? And maybe ways to get around it, okay, if you're still struggling. All right, so you can borrow up to $2 million max, right? They are really targeting smaller businesses that have been harder hit. Okay, that's the term, harder hit. And so that's 300 or fewer employees. By the way, if you have multiple locations, it's 300 or less employees for each location. You would have had to have received and used all of the original PPP loan amount for you to be eligible for the PPP second draw. Okay, so that doesn't mean that you would have had to file for forgiveness. Okay, you have 10 months from the end of your covered period. Remember, that could be 8 weeks or 24 weeks. 24 weeks is 6 months. You have 10 months after that before you would be required by law to file for forgiveness or lose the opportunity. Right, so they're not requiring for you to do that yet. They just want you to have your documentation collected and verify that you have spent those funds. Okay. All right. Then you have to demonstrate a need. The need is having a reduction in your 2020 gross earned revenue of 25% or greater than what your gross earned revenue was in 2019. That's kind of a tough conversation. So I'm going to try to, visualize this for you, how you would look for this. First and easiest way to kind of document this is to look at your gross earned revenue for 2019. Now, that's a fancy way to say the most amount of money you made in 2019. Remember, that would be like line 1 on your taxes, okay? And then you're going to look and see what your gross earned revenue was for 2020. Most likely you're going to have a profit and loss statement or an income statement, right? Most amount of money you made. Now for 2020, because a lot of people received support through what we would call CARES Act money. CARES Act was the act that brought us the Economic Injury Disaster Loan, the EIDL loan, right? As well as the EIDL advance and the PPP funds. So if you got any of those monies in 2020, take those out. Okay, that's not part of your gross earned revenue. That's revenue, right? But what I'm seeing business owners do is they put that at the very bottom of that profit and loss or income statement is other income. Okay, so it's not earned, it was given. Okay, so you're looking at those gross earned revenues in total between 2019 and 2020. And if you have a difference of 25% or greater, then you're eligible. Now, that's not the end all be all. So let's say you're 24%, right? Like, you know that you have been hit hard. They're giving you another way to document the need or to demonstrate the need. And that's by taking your 2019 revenue, right? Profit and loss or income statement, either one, they call it different things. Divide that up by quarters, first quarter, second, third, or fourth. And then do the same thing for 2020. Remember, you're looking at your earned revenue. No CARES Act money in that conversation, okay? And then compare those. And if you got similar quarters, for instance, quarter two, right when we were announced COVID was hit, right? Let's say quarter two, 2019 compared to quarter two, 2020, you can demonstrate 25% or greater reduction. Then you can show that you're eligible, okay? With that being said, they did open up the eligibility categories to a few new groups, and I'll talk about that in a minute, so hang on, right? But they did exclude one big group of people from being able to get this second draw loan, and that's going to be businesses that are publicly traded. So these are companies that have gone and they are on the NASDAQ, they're on Wall Street, they're getting shares from the public, right? That's a publicly traded company. Those businesses are too big to be considered in this Relief Act, right? They also came back and originally excluded any what we call shuttered venues. Okay, so shuttered venues, that's going to be your movie theaters, that's going to be maybe performance arts, right? Where there's a specific performance stage and there's a specific fixed seating for the audience. There's several different caveats to that. In fact, they just opened up the Shutter Venue Operator Grant application yesterday, right? So brand new on the market, it's there. But originally they said you couldn't get the second draw and the shuttered venue grant, right? They were in the same bill. They said, it's one or the other. They came back and they said, forget that. Right? That's why I've deleted it or drawn a line. You're now eligible for both. So even if you're trying to apply for the shuttered venue operator grant, you can still apply for the second draw now. They've corrected themselves. All right, with that being said, how do you calculate the amount you qualify for? That's a good conversation. So remember that 2.5 times the average monthly payroll? Well, they're carrying that over, right? They've renewed that, except for one group of people. All right, that's going to be business owners that have a 72 at the beginning of their NAICS code, that business industry code, right? So where do you find that? Remember that tax return? Remember Minnie Mouse had one on there? You're going to go back to your tax return and see if it starts with a 72. If it does, and you're in accommodation and food services, then you're able to take 3.5 times the average monthly payroll cost for the loan. Okay. Now, they have done a reduction in paperwork act just to try to help people, since this will be the second loan they've had under the program with SBA. Clearly, SBA has a lot of information on your business at this point in time, okay? Probably too much, we could argue. All right, with that being said, they did say that any loan amounts that were $150,000 or less, that you could certify or attest to the need, right? That difference in your gross revenue to demonstrate the need. Now, I'm seeing a lot of banks and lenders still ask for copies of your 2020 financial statements to kind of certify that you've made that claim and it's accurate. So kind of depends on the lender, what type of documentation they ask for, but just know that they kind of bake that into the law to try to help. All right, with that being said, I did tell you that there was a few new categories that could borrow, right? So I'll just touch on that. Farmers, they came back. Not only were they included later on in 2020 to the conversation, but they now have loosened up what they will lend to. And so they're allowing them to look at the Schedule F and to use the gross income similar to the sole proprietorships. Kind of interesting. They've also allowed housing cooperatives. We don't see a lot of that in Texas, but up north, for instance, in New York, there's the retail space on the first floor, right? And then there's maybe apartments that are independently owned above, and then they share the taxes and the maintenance fees. Okay. That's kind of the housing cooperative conversation, right? So housing cooperatives now can join in and get meaningful support as long as the rest of that is eligible, as well as news organizations that hold an FCC license. They just have to make sure that they are focused on generating local news and emergency disaster information. Okay, as well as what we call 501c6 designations. Those are nonprofits, and they are specifically pointing to destination marketing organizations. Right, so those are the organizations that bring really big opportunities to the cities. For instance, the NFL, right? Or maybe there's I don't know, all kinds of opportunities, golf tournaments, whoever, they bring or attract those type of opportunities for the economy. Now, as long as those businesses are not involved in any lobbying or political activities, that is a big no-no for SBA. All right, with all that behind us, we're back to the forms, okay? So remember, I'm going to make this easier for you. We're not going to have to go through all of that again. All right, deja vu. We know where all that is. All of this looks so familiar, right? Until we get to this box. Here's where you're having to self-certify the need that you meet or demonstrate the need. So you're going to just quote what those gross revenues were for the annual or for the quarter, okay? And then the rest of it is exactly the same as what you've seen before. It's just in a different format. All right, next, this is our Schedule C filers, right? And remember, they had a shortened number of options for entity selection. Deja vu, everything looks the same, except whoop, they slipped that little box in there for the reduction of gross revenue, right? There it is. Everything else is the same. Woo. All right, so we made it to the end of the PPP second draw conversation, and I promised you a couple of things. I promised you I would connect the most recent conversations I've had with other business owners, finding it difficult to get the second draw. What was that conversation? Now, primarily, it's business owners that were able to provide bank statements justifying draw amounts to their lenders, and alternative records or documentation to qualify for the loan. Lenders, and this is nothing against anybody, right? Lenders can't use that anymore. SBA came back and said, no, no, no. It has to be the 941s, or it has to be a tax record like that Schedule C, or maybe a K1 from a partnership. It has to be that level of information, no more, bank statements for a year. Okay, now they are still asking for bank statements, but it's primarily to document or show that you were in operations as of February 15th of 2020. If you can't show that, then that's how they're kind of gaining confidence around you not being eligible. Okay, so remember, we are connecting a lot of information. The other side of the second draw frustration that I'm seeing is that lenders are maybe not moving so quickly. People are not comfortable with providing 2019 information and headcount when 2020 looks so different after the last cover period. So they're standing on the side saying, if I use 2019 financial data, do I have to have the same headcount as 2019? What does that look like? And so the answer is, like, you have two options, right? The 19 or the 2020. Think about what you're using And remember, the requirement is for you to retain those jobs, right? Not necessarily benefit in any great material way. So if you've reduced your headcount considerably, then even though it's enticing to use the 2019 and qualify for more, you will be required to meet that same type of headcount. So if you don't intend on doing that, it's probably better to take the smaller amount. Okay, so that's for you. That's just my advice. Remember, you have to document everything. You just want to make sure you meet the requirements and you do so in a clean and safe fashion. Another conversation I've had with business owners is where they are having to pivot, but they're pivoting so much that they are no longer in the same industry code, right? So what does that look like? I had a business owner just the other day that had a restaurant and it failed, didn't want to renew the lease. It was a bad situation. He had 4 employees, but he didn't want to let go of those employees. So what he ended up doing is pivoting and then taking those employees and putting them in a slightly different capacity, doing maintenance and cleaning for other businesses, right? That's a pivot. That's a pivot. But when he came to get in his second draw, it still showed a 72 on his business industry code, right? And he's like, oh, I could really use that 3.5 times, right? Do I do it? And I'm like, well, hold on, stand back and think about what that looks like. You've pivoted. You're not doing that, right? If you take more money than what you really can document or that you show that you need, that could look bad, right? He ended up going ahead and getting through the process. Took him a little bit longer, but he correctly updated his NAICS code with the IRS and then applied, right? And made sure it was a clean shot. And so sometimes you're going to have to do that, but it is being honest upfront and being able to document it. All right, with that being said, just like the first PPP loan, when you get through with the second PPP loan, you have the same requirements to file a forgiveness application. Separate forgiveness application, so they'd be separate. You'd be referencing those separate SBA application numbers and PPP lender numbers, right? So 2 of them. But you need to hold on to your documentation for your spending. You still have the requirement to meet the FTE, that full-time equivalency headcount, as well as the salary hourly wage requirement. And you still have the safe harbors available. Woo! With all that said, you guys are still hanging in there. All right, so we're at the very end here, right? We're at the end, last conversation. So regardless of you taking the first PPP loan, or if you've taken the first and the second PPP loan, any borrowers in this program, they find themselves in this PPP loan forgiveness scenario, okay? So just the basics, you know that once you take that money, you've got either 8 weeks or 24 weeks to use it, to spend it, right? And they are telling you that you have to spend it in a certain way. 60% or more needs to be for payroll, eligible, approved payroll costs. And there's 2 metrics that they're using, and we've already started to introduce that. 2 metrics they're using to document that you've done that. That's going to be that full-time equivalency headcount I spoke of, the number of employees, right? That's W-2 wage earners, by the way. And then the salary and wages being paid to those employees. Okay, the best way to explain this, when they say salary and hourly wages, they're talking about the dollar amount being paid per week, per unit to those employees. So if I had an employee that was making $50 an hour before the pandemic comes, and to keep them going, I can't pay them $50 an hour. I renegotiate with them and I say, I'm going to pay you $25 an hour. I just gave them a 50% haircut on their hourly rate. That could potentially become a problem for a penalty. I can keep them within 75% of that original wage per hour or salary, right? But if I let it fall below that and I don't correct it by the very end of that covered period, then I'm up for a penalty, right? So those are the 2 metrics that we're talking about. Headcount, right? And then how much you're paying those employees, hourly or salary. All right, so that's 60%. So the other 40%, no more than 40% of the loan can be spent on these approved non-payroll expenses. And they just expanded those categories. And I'm going to read it all, and it's a mouthful. And you're going to say, that's more than I want to think about. Okay, I know. I know, but I'll go over the new ones in a minute, all right? But it's mortgage interest payments, mortgage being real estate or personal property like equipment, the interest only payment, rent or lease payments, for contracts that were already enforced or operating as of the date of disaster, February 15th or before. I've had somebody come to me with a new lease that they did in the summer of 2020 after the disaster struck, and they were trying to use those lease payments eligible for the PPP, and I was like, nope, can't do it. Had to have had the lease before the disaster, okay? And then essential utility expenses, right? That's going to be your light, your internet, water, waste management, gas, and then what is the last one? Waste management, gas, lights, phone. That's your phone, right? And then any transportation costs on getting any one of those primary essential utilities. Okay. And then covered operation expenditures, covered property damage costs, covered supplier costs, and covered worker protection expenditures. I'll go over those new ones in a minute because I think a lot of people are trying to figure out how do they use this money to the best of their benefit. And there's some new options here, right? And so I want to just kind of frame that for you. I'm going to do that outside of this particular slide. All right, with that being said, right, as long as you can show you spent the money within the 8 to 24 weeks in those proper categories, then you can apply for full forgiveness. All right, now, the government has been all over the map with certain aspects of the forgiveness conversation, and it's a little mind-numbing. So I'm just going to try to clarify this for you. Originally, last year, we were told that we wouldn't have to pay income tax or federal taxes on any CARES Act money. And they're still holding to that, right? Now, state and local taxes, different conversation. But for the IRS, they're not taxing you on CARES Act money, so it doesn't go into your taxable gross income. But they also just came back and said that they're going to allow for you to include any of those expenses that you use those CARES Act money for as allowable deductible expenses for your tax. Before they were telling you you couldn't, you had to separate it. Now they're telling you you can. So if you normally put rent as an expense for your taxes, you can include all of your rent. You don't have to separate out the CARES Act money for that. Good news, right? On top of that, they have repealed the idle advance deduction conversation. So if you had tuned in last year, we were telling all the business owners that if they had received an idle advance, also known as an idle grant, right, anywhere from $1,000 to $10,000, if they had gotten that money, then they weren't eligible for full forgiveness on the PPP loan. They're going to have to pay that other money back on the PPP loan. They've repealed that. Okay, they've come back and they said if you got the grant, that's great, right? You can also apply and receive full forgiveness if you're eligible. Right, with that being said, there are compensation caps. So I mentioned on the way going into the initial loan that there's a cap of $100,000 annually for any salary. Okay, so the way you come in is the way you find yourself going out. So $100,000 annually is the maximum amount that you can account for any compensation for any employees and owners too. I'll talk about the owners a little bit more. There's more for them. But for an 8-week covered period of time, that max translates to $15,385. And for a 24-week covered period of time, that's $46,154. Okay, that's based off of the $100,000 amount and the time. Now for the owners, I told you it was slightly different. Any owner employees with 5% or greater interest in the business, they have to follow a different rule. They cannot pay themselves more than either 8 weeks of their 2019 compensation or 2.5 months of their 2019 compensation. So it's based off of either the 8-week or 24-week covered period. Now, if you're like struggling saying, why 2.5 months, Rebecca? Why not 24 weeks? I can do it for 24 weeks on the employee. And the answer is, remember, the way we calculated the original PPP loan was at 2.5 times the average monthly payroll. So they're looking at those owners saying you should have only been given benefit for 2.5 months of payroll. for your 2019 year. Okay, so a little different, but it makes sense. And with that being said, I promised you I would go over those new expense categories, right? Okay, so covered operation expenditures. That sounds so complex, but in reality, businesses have had to kind of pivot and figure out how they're going to do business in this current time where we're all at home. And a lot of companies have had to go and purchase software. Maybe it's Zoom, maybe it's some other platform, right? So that they can communicate to their teams and their customers and clients online in this virtual world. Any of that adaptation for the virtual world, right? And that includes any human resources costs, any accounting needs to meet the requirements for this government loan. They're saying that you can include those in those eligible 40%, no more than 40% non-payroll costs, okay? And then any businesses that had maybe any type of looting or damage due to public disturbances that occurred in 2020. And the sad part is that's still going on, right? That's horrible. Any out-of-pocket expenses that they incurred, they can also use these PPP funds to support. And then any covered supplier costs. So supply chain interruption, horrible. And it got even worse when the ship got turned over in the canal and everything was delayed, right? Oh, so if you had any increased supplier costs to try to survive those costs, as long as you can show the bills, right, and the expenses, those invoice, you can include those. And then any PPE or any barriers to keep people safe, any investments to try to follow the government and state and local cover guidance is eligible use of funds. All right, and so now let's go into the non-payroll eligible costs conversation. I'm going to just summarize this for you. If you have expenses and you take any new revenue streams in to offset your expenses in any of these categories, you need to take that into account and then just take the net expense, what your true exposure expense is, into the forgiveness conversation. So they give you all kinds of scenarios, like let's say you rent a property, you pay $7,000 by contract, but you sublease for $3,000, right? So your true exposure of $4,000 is all you can include in the lease, right? And then if you have maybe a holding company and you have an operating company and the operating leases from the holding company, and the holding company has a note, it's the mortgage interest, the smaller amount that you can include on the forgiveness conversation, right? So the only big one here that I see that I just want people to be aware of, if you have converted from being maybe renting a space and being kind of the general public to transitioning to a home office, right? And now you're going in and for 2020, you're doing your home office. There's typically a percentage of square footage versus your entire house that you're claiming is that home office. You need to apply that square footage, that percentage, to your rent or lease expenses, mortgage interest expenses, anything that's applicable, okay? Ooh, we got through that pretty quick. All right, so I had warned you that when the government said there was no collateral or no personal guarantee, that wasn't, a free-for-all, and that it would come out on the back end. Okay, so here you go, coming out on the back end. They still have to track, and they still need to track where all these government dollars went, right? And what they're worried about is businesses failing and going out of business. Let's be honest, that's a really good conversation. A lot of businesses can't make it, right? And they need to make sure that those people that got the money can still report back to the government as to how it was used, right? That they don't lose that data. They don't lose those records. That those people just decide to, go on a fancy vacation and just call it quits, right? They don't want that. So what they're doing is they're tying you into that business for the entire time frame, right? The 6 years that they have you, right? So if you are considering any material change in ownership, and they're defining that as 20% or greater ownership in the business being sold or transferred, if you are selling your business assets for 50% or more of your business assets for a fair market value, that's a material change in ownership, or you're merging into or with another entity and that business is going to go away, right? If you find yourself in any of those conversations, you're supposed to write to your PPP lender, put it in writing, and tell them you're considering this and provide them with a copy of the agreement before it's signed and finalized and get their blessing over it, okay? And then once you get the blessing, then you can execute and you can do it. But it does not relieve you from having to hold on to this paperwork for the entire 6 years and to document the spending and do the forgiveness application. Those original owners that signed those contracts are held to that for the entire time. They're not resolving their responsibility. Woo, that was so much fun. Okay, so with that being said, there are 3 forgiveness applications. We're finally to the forgiveness application side, right, where I show you the forms. There's Form 3508S, S stands for simplified. Form 3508 easy, and it is easy. And then this long, burdensome, complicated Form 3508, right? They just call it 3508, right? Just know that no matter which application you're using for forgiveness, right? I'll guide you through, who's supposed to use what and what that looks like, but you need to fill out one. The applications give you the ability to calculate any reduction in forgiveness. They give you an idea of the flexibility, right? So you get to kind of set the timeframes and the flexibility around how you're stating your story. And they give you clear safe harbor definitions and guidelines. So it's really nice. So let's go into that definition of safe harbors, okay? There's technically 3 safe harbors. Not complicated, but you want to know all 3 so you kind of understand where you can cultivate the conversation. The first 2 that we're going to talk about center around this whole FTE, full-time equivalency headcount conversation. So remember that conversation? Once you get the money, you're supposed to hire back up to the same level or headcount that you had for the time period that you are quoting your payments or your payroll, right? You're getting that level of support, so you need to hire up to it. Okay. That is FTE safe. That's FTE. Safe Harbor 1, right, is for businesses that maybe saw a reduction in their ability to operate due to the Human Health Services, HHS, the CDC, the Center for Disease Control, or OSHA. Okay, so maybe OSHA came in and said, I know you have a daycare. Right now, you can only operate at 50% capacity, 75% capacity. Maybe you have a restaurant, you're at 50 or 75% capacity. Obviously, if you cannot fully open, that's going to hinder how many employees you have working, okay? You're not going to just hire them to sit around. So in that case, for the FTE Safe Harbor 1, as long as you're following that government protocol and you're being told not to open fully, right, you can have a reduction in the FTE, the number of hours your employees are working, and find Safe Harbor. That's FTE Safe Harbor 1. FTE Safe Harbor 2 is where business owners might have seen a reduction in headcount, but they have been unable to control that, right? Like it goes beyond them. It goes into other situations like unemployment rates are higher than what they're paying. Who knows, right? It's just beyond their ability to navigate. And so they're setting aside 6 potential scenarios for this FTE Safe Harbor 2, that as long as you can document that you did your best, that you met one of these 6 scenarios, you can avoid penalty. Okay. So the first one is an employee refusing to return to work. Just make sure you've got your documentation. You offered for them to come back, and you've got some documentation or verification they refused to come back. Okay. Next, let's say you had to fire for just cause. Billy didn't show up for a week. There's no way you should be paying Billy, regardless, right? Nobody's telling you you have to do that. So you had to file for just cause. You need to have the paperwork set aside. Let's say you had an employee resign, they found a better position, right? So you have that resignation letter, right, showing that they resigned. Let's say that an employee just couldn't, work full time from home. It was just too complicated for them. So they requested in writing to have reduced hours, and you accommodated them, right? The written request for reduced hours and the written response back accommodated. You want to document it. right, let's say that you had to reduce hours to an employee while you're kind of navigating this space, and then you got your PPP funds and tried to bring them back for the full time, and they refused. Just document the conversation. And let's say you did your best to rehire, but you just cannot find that right person, okay, within the 8 weeks or the 24 weeks. And just know that if you take a 24-week, it's more of a heightened concern. You need to try to hire back up, right? But you should be able to document your attempts, how you've posted the job, that you've interviewed, what those interviews look like, what made them ill fit for the position, right? You need to document it. All right, so that's the 2 FTE safe harbors. Finally, let's talk about the salary hourly wage reduction. So remember I mentioned that you had to pay those people once you got the PPP funds, 75% or more of what you were paying them before the disaster or in that payroll that you used to calculate your loan. Let's talk about that. In this scenario, as long as you bring up those wages to 75% or more on that last payroll cycle within your covered period, as long as you can show and document that, you can meet the safe harbor, okay? All right, with that being said, we're done with safe harbor. We'll see it in a little bit as we try to navigate the space and try to see how we use it. But let's talk about all these spending records, right? The documentation, because I told you 50 million just from this last round was set aside for audit, and I've already seen people being audited, right? So this is a real situation. So what should you be thinking about? Okay, I was in a presentation or a class last night, and I heard a accountant talk about this, and he said, the IRS is auditing all these people. Please make sure your records are in order. Don't just have your bank statements and think that that's it. And it immediately made me think of what I know of the SBA protocol here, right? SBA always requires that you show 2 forms of information to document the same situation, right? Seems a little overkill, right? But it goes along with what that accountant was saying. SBA is always using what I call a 2-prong approach. You've got to use your bank statements to show that you received the money and you spent the money. It left your control, okay, during that 8 or 24-week period of time. So you'll need the bank statements, but you also need to show the support documentation of what you actually did with the money. That's the detail that goes along and backs up or supports the bank statement, right? So if I paid payroll and I can show my bank statement for that, I should have some payroll processing records to show, how that total payroll was calculated. How many employees, how many hours maybe, right? Any of that needs to go into that payroll processing record. Maybe you don't have payroll processing records like ADP or PaySphere. Maybe you just have canceled checks where you paid those employees. Copies of the front and back of canceled checks, just to document exactly who that money went to, right? And then it matches your bank statement. What you don't want to do, oh, it makes me nervous just talking about it. What you don't want to do is put all this money into an account and treat it like your own personal piggy bank. All right, so if this is business money, you just took out a business loan with the government, and now you're turning around and you're going to Jack in Box, you're going to get your nails done. I can't tell you how many times I've seen that. You've gone to the tanning salon, or you're paying your daycare out of that same account. Please don't do that, okay? That's an audit nightmare. They're going to be like, how do I know you actually spent this on payroll or that you spent this on these eligible expenses? You want to make sure that you're kind of protecting that and you're only showing the government what they need to see, okay? Right. With that being said, non-payroll, you just want to make sure you're documenting the mortgage interest portion if you're using that. So maybe a lender statement showing what was paid during that time frame of your covered period, what was the mortgage interest payment. Then, of course, rent or lease payments. Be prepared to have a copy of the lease agreement showing that the lease was enforced before the disaster. And then, of course, those utility expenses, time frames for those utilities, when they actually were paid, it should balance back to your bank statements, okay? All those good things. All right, when you've got all that figured out, you can start working with your forgiveness application. Just have a calendar because you've got time frames you're looking at. Make sure you've got a calculator. I like to use Excel and make myself some little notes as I'm going so I don't forget. You want all of the application or that pre-qualification documentation. All right, so think about this, right? The way we come in is the way we go out. So if we came in, want to know what the owner compensation was when we came in, because we know going out, there's compensation caps, right? We need to know what our payroll was to our employees so that we can make sure that we can document that we're paying them 75% or more, right? You need those details so that you can fully explain your forgiveness conversation, okay? And then any of the documentation we just talked about, how did you spend those funds? Your two-pronged approach to spending. And more than anything, just have some patience with yourself because this is something where you're going to start it almost like a puzzle. It's going to be complex and you're probably going to need to, give it a break. Go take a drink, right? Come back and stare at it some more and try to find those missing pieces. It's very much that type of situation, so be patient. All right, with that being said, we're rounding the corner now, so we're going to go through the forms. I'm going to go quickly, right, because you already know the deja vu. So the first form we're going to talk about is probably the easiest form. It's Form 3508S. It's simplified. And what they did, there's a big call to action from the banking communities, from the business communities, saying that this forgiveness process was way too cumbersome and it was taking business owners way too long to fill it out, right? And this was not the best use of time, which I would agree, it was not the best use of time. With that being said, they came back and said any loan amount under $150,000, they are allowing for a one-page forgiveness application. What they did not say was that any loan under 150 got automatic forgiveness. They did not say that, right? They still want you to fill out the form. They still want you to provide the documentation. You spent it accordingly. Because remember, when you signed that application, you said you were going to do a bunch of things. They want you to confirm you did those things and you can show that in documentation, okay? They want that signature on there. And they still want you to meet the FTE, that full-time equivalency headcount, and the salary hourly wage requirement. So that is what you're going to be testifying to. And here's that one-page form. Super simple, super simple. Let's take a look. We're going to zoom in. Deja vu, right? But notice they have two new little boxes here. They've got the first draw or the second draw. Remember, 2 applications for forgiveness if you've got 2 PPP loans. You denote that. You're going to put in your PPP loan number. The PPP lender's loan number, right, might be different from the SBA's number. The amount that you borrowed should be on your promissory note. The date you receive those funds deposited into your account, that's what they call disbursement. Right, and then now we start talking about that FTE, right? Ooh, the FTE. Okay, so I'm going to go over this in great detail when we get to another application in just like a moment, right? And I'll define this. What I will say about this right now is the employees at the time of the loan application, they're really speaking to the employees for the payroll periods that you are quoting your average monthly payroll, right? This should be the same as what you put on your second application, may not be the same as what you put on your first application. If that was in 2020, before they defined FTE, it's been a journey. All right, so just note that this may be a little different depending on the time frames, right? But it needs to speak to the payroll that you've recently stated or quoted. Right, and then over here, this is going to be the employees at the time of the forgiveness application. To be more exact, the headcount or the FTE you had on that last payroll cycle before your covered period ended, okay? Because you have 10 months to file the forgiveness application. A lot can happen in 10 months, right? You're not held to holding on to people if you can't afford it. You just have to do it while the government's supporting you with the payroll support. All right, and then your covered period. So the start of the covered period is the date you receive the funds. So that'll match your disbursement date. And the end of the covered period is going to be either 8 weeks or 24 weeks. You choose. Best way to figure what that is just to go to Google and just say, what is 8 weeks or 24 weeks from this date? And Google will immediately spit it right back out to you, and you can put it on your application. All right. Now, the only thing they ask for you on this form is what was the loan amount that you spent for payroll costs? So remember that's a trick question. So all the way at the very beginning, I said you needed to spend how much on payroll? Right? You needed to spend 60% or more on payroll costs, right? So you don't qualify for full forgiveness, not even on this form, if you can't document that you spent 60% or more on payroll, right? So they're still asking you the question. They're just simplifying it for you, but you know the answer needs to be a certain way, right? And then the amount for forgiveness cannot exceed the loan amount, but you should be able to show every penny that you spent on this loan, right? That full amount. Because if I can only document that I spent half of the money, right? And that's all the support documentation I provide, I can only get forgiveness for half the money. They won't forgive me for all of it, okay? All right, with that being said, remember I said there was some scary stuff in here? Right, so here you go. You have to initial to the scary stuff. And it basically says that if you have knowingly or you were caught knowingly defrauding the government, giving false information, maybe taking more money than you should have, and they're calling that defrauding the financial institutions, eek, right? You could be penalties of some really scary hard time and some scary penalties here. I do not want to be that person. And you're going to sign and date and you're done, right? One page, not bad. Still got to keep up with your spending records, right? Okay, so moving on, next form, 3508 easy. Two groups of people can use the easy form. All right, remember this has to be for loan amounts that are above or 150,000 or above, right? Because otherwise you would use the S form. So the easy form can be used by business owners that didn't reduce the salary or hourly wages of the employees by more than that 25%, and they didn't reduce their employees, their number of employees, all the way from January 1st of 2020 till the end of that covered period, right? I call those rock solid business owners. All right, the second group of people are going to be those that didn't reduce the salary or wages more than 25%, but then they fell within that FTE Safe Harbor 1 category, right? Where they were still following guidance from HHS, CDC, or OSHA. They couldn't physically have those people there working. Okay, so if you fall within any of those categories, you're an easy form applicant. There's actually 3 pages to this now. The third page is the signature form. But let's just go in, remember, deja vu. Only difference here is you're going to put your payroll costs, and they now give you these other eligible spending categories, right? Those other non-payroll categories. All right, so you can put all those costs in there. And then the bottom here, line 9 through 11, you're going to count the particular forgiveness amount 3 different ways. You're going to calculate it. It could be the total sum of your spending. It could be your loan amount, or it could be that 60% of those payroll costs, right? 60%. So you're going to figure out which one of those is the smallest forgiveness amount, and that's what you can request for forgiveness. That was easy, right? Yeah, it was easy. Okay, so then we've got the long, burdensome one, right? And this is where I was sharing. I typically will go ahead and do the Excel spreadsheet. So as I'm going along, I can make notes, right? You want to make the notes. You want to look at what was happening before the disaster, right? The first quarter of 2020 typically. Or if you're having to look for the further year, right? You're looking and seeing what you were paying per hour or salary for those wages that you included. You're looking to see your head count, the average number of hours that you were paying those people. So you're getting a good idea of what you're comparing against. Right, and then it's what happened when the disaster hit right before you got your PPP loan, right? Did you lose head count? That's that FTE conversation, right? And then you want to take account, what did you do once you got your PPP funds? What did that look like? How did you spend that money? How did you hire, right? What was your head count? Now, I had mentioned that I would get to that FTE conversation. So I promised you I would, and here we are. There's 2 ways to calculate your FTE. The first is going to be the easy way, and you're just going to call people full-time or part-time, okay? And this is your W-2 wage earners. This is not your 1099 or contract labor. Sad to say, they don't count in this conversation. They count in other conversations, but not in PPP conversations. Because remember, they are independent contractors. They can go and get their own PPP loan. They don't need you covering their wages too. That would be double count for wages there. So in this case, you would count full-time, part-time. So I've got 3 full-time, 3 part-time, right? Full-time is 1.0 or 1 FTE. Part-time is 0.5 or half an FTE, right? With 3 full-time, 3 part-time, the easy FTE calculation would be 4.5, right? 3 full-time, so 3.0. Half for each part-time, that's 1.5, so 4.5 FTE. But they also allow you a second way to calculate it, which is more advantageous for business owners that have more part-time labor. Okay, so if you have more part-time labor, you take the average number of hours worked per week. So yeah, if you're using the PPP second draw conversation, whew, right, and we're looking at 2019, and we're trying to figure this out. Yeah, they honestly want you to look at how many hours you paid them within that time frame, that money that you're calculating. And then you're going to compare that to the number of hours that they worked. Oof. So you're going to figure the average number of hours worked per week divided by 40, right? And then nobody counts for more than 1 FTE. Okay. And then for the part-time labor, you might be able to dial into a slightly lower than half, right? In this case, they work 10 hours per week. So 10 divided by 40 is 0.3. So I can count them as 0.3. So my overall FTE comes to 3.8, which is lower than the 4.5. Just remember, whichever calculation of that FTE that you use, you have to be consistent through the end, right? You can't switch it up, okay? It would be nice, but you can't. All right, so in this case, we figured out that the part-time 3-person was not coming back. I had to lay off 4 people, right? Part-time 3-person not coming back, I got an FTE issue, right? Part-time 2-person, they came back, but at part-time, so 5 hours a week. So notice my weekly gross wages is 50%, right? So let's start to worry. Does that mean that I'm in a salary hourly wage penalty scenario? And the answer is no, because I'm still paying that person what they were being paid before, right? 100%. So remember, 75% or more of the hourly wage or the salary wage. Okay. And then I was able to bring back another part-time person full-time and get another full-time person back. So I ended my FTE at a 4.1, which is ahead of what I had showed before. So big thumbs up. This would be an FTE2 safe harbor conversation. All right, so now we're on page 1 and 2 of that forgiveness application. So they haven't changed this since the last time we talked, right? They make you work for it. You can't dive into page 1 and start filling out the application. You have to take this from backwards to forwards, right? So with that being said, we're going to just go ahead and go to page 4. And on page 4, that's going to be our Schedule A worksheet. All right, so for the Schedule A, the way they want to organize this information is they're looking at your payroll, okay? So Table 1 and Table 2 are going to be your W-2 wage earners during your covered period, that 8-week or 24-week time frame. Table 1 are going to be those wage earners that make $100,000 or less per year. Table 2 are going to be wage earners making more than $100,000 per year. So remember that compensation cap conversation? Right, we're going to take those compensation caps, and so that's going to either be that 15,000 amount or that 46,000 amount, depending on your covered period you choose. Okay. And so then you're going to list the names of the employees, the last 4 digits of their social security number, and the gross wages being paid during that 8 or 24-week period of time. Gross wages. Gross wages will total box 1. Your FTE that you calculate will go into box 2. And then any salary hourly wage reductions go into box 3. Okay, so remember, you got to look at what you paid those people, gross wages. And if you see where you maybe reduced that hourly wage or salary wage and didn't bring it back up in the nick of time, that is a penalty. And you would go to the instructions and it would walk you through how to calculate that. So essentially, you're going to take the difference between that 75% that you had to get to, less anything that you paid. So that difference per week multiplied by the weeks, and that ultimately gets multiplied by any lost headcount. Awful, right? Awful. It mushrooms out of control quickly. Now, one little quick thing I'm going to say is that if you are an owner employee, you do not belong on table 1 and table 2. Okay, you don't belong there. You're going to belong on page 3, which we're going to see in a minute, line 9, and I'll point that out to you in a minute. All right, and here's our Safe Harbor 2 conversation. So they're looking at, did you lose headcount? Did you bring it back up? If you can show that you brought it back up and you met the Safe Harbor, then on page 3, that's the next step, line 13, we get to put a 1.0, which helps us avoid that penalty, okay? Not horrible, right? Like if you do your work on the front end, it's not bad. All right, and so page 3 for the Schedule A, you're just regurgitating the information. You're just regurgitating it. You're going to put your box 1, your box 2, here's your box 3. But here's that Safe Harbor conversation for the salary hourly wage penalty. So let's say you did catch that salary hourly wage situation in time, nick of time, right? And you brought it up, but if they looked at the average gross wages paid and compared it, they would see a difference greater than 75%, right? Okay, you can check this box here and say, look, I met the Safe Harbor. I can document it, and you can avoid the penalty. You can put a 0 here, okay? That's cool. All right, and then you're going to bring any table 2 high wage earner information over. Ultimately, you're going to add these 2 labor pools together to come up with the total wages, right? Here's your non-cash compensation, your employer paid health benefits and insurance and retirement plans, your state and local taxes, you add those. Right, and here's that line 9, the owner compensation. Here it is. So remember, the compensation, the owner compensation has to match no more than 8 weeks of your 2019 or 2.5 months of your 2019, depending on that 8 or 24-week conversation. So they're going to want you to document it. So you're going to have to bring that information from 2019 and show it, and show that you didn't pay yourself, or you're not trying to get forgiveness for any money outside of that compensation cap. You could have paid yourself more. You just can't include it in the forgiveness conversation. All right, with that, you're going to total line 10. That's your total payroll cost. That's how you get to total payroll. And below that, this is the magic here. This is where those bankers are asking for you to self-certify that you've met these requirements. So the bankers, they made a big stink to the government saying that they don't want any liability for catching any of this. Okay, they don't want it. They don't have time to look at it. So they're putting all the responsibility for the truth and verification onto you, the business owner. So you better be ready when you check these boxes to say that you've met these requirements, that you can document you've done it, because the bankers aren't doing that for you, okay? So number 1, remember we talked about the easy form. There was no reduction in amounts paid per hour. You didn't reduce your head count. There you go. That's where they're having you self-certify that statement. And then there's that Safe Harbor 1 conversation where you were impacted by HHS, CDC, or OSHA, and you couldn't fully open. Therefore, you couldn't have that number of employees. There you go. There's all the details. You'd be checking that box if it applied to you, self-certifying that was true. Right, and then that Safe Harbor 2 conversation, right? We just went through that. That was the scenario. We would need to make sure we check that box and say, I met the Safe Harbor 2 scenario. And there's that line 13 that had told me to take the 1.0. Again, not too hard, right? Like we can all do this. It's like we're playing the hokey pokey. It's all good. Now we're back to page 1 and 2, deja vu. Right, this looks very familiar too. We're detailing payroll and all those other eligible non-payroll costs. This is the difference right here. Now they're having you adjust any penalties. So if you weren't able to make the Safe Harbor and you had to take the penalties, remember we calculated that starting on page 4, brought that over to page 3. Now we start to work with it. We start taking our total eligible expenses, right? We subtract our penalty for the salary hourly wages. Well, actually, you multiply that penalty for salary hourly wages by the lost FTE, lost headcount, and then you subtract it. Ugh, right? And there's your modified total for line 12, and then your PPP loan amount, and then ultimately 60% of your payroll cost. And you're going to select the smallest potential forgiveness amount. And I have brought you through the fire, right? So that is the conversation. So important details to remember. New guidance is rolling out weekly. I anticipate more forms. I'm surprised they haven't come yet, right? It was a little over a week ago that we learned, well, no, it was last week. They extended the due date. So now all the forms have to be changed. So we'll see that come. There'll be new forms for everybody. There is a new deadline for the PPP program. So remember, for the loan, that is May 31st. For forgiveness, that is 10 months from the end of your covered period, right? We're starting to get there, by the way, team. A lot of people are coming up in, let's see, like June, July, August. So be mindful of that. That's for a 24-week cover period. So you want to make sure that you get that in, because if you go beyond that 10 months, you can't apply for forgiveness. It's no longer offered. So make sure that you're adhering to any safe harbors. Penalties are awful. Make sure you're keeping good, clean spending records. Please, 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 right? The audits are real, and you want to make sure that you can document what happened. So keep up with the conversation. So in summary, support for small businesses is evident. We're seeing that right now. The Biden administration is slowing things down, pushing people ahead to try to get support. But just remember, ultimately, it's the responsibility of the business owner to find the support. Your SBDCs are here. They're supporting you. All you have to do is ask, and that assistance is free. So take advantage of it if you need more. My name is Rebecca Schultz. I'm the founder and executive loan consultant for CenterLock. If you have questions about the presentation, you just weren't quite clear on something, feel free to reach out to me. I welcome that. Outside of that, I know that your SBDC advisors are there. They're in the thick of it. They look like that crazy hair guy at the beginning too, right? We're all in this together. So if you have questions, you can reach out to your SBDC and book an appointment today. And with that, I think I will get to stop my slide
Thank
sharing
you.
and answer any questions that have come up.
Yeah, thank you so much, Rebecca, and for trying to make very complicated procedures so easily understood, or at least much easier, I should say. Yes, if you do have questions, please go ahead and put them in the chat box now. We do have at least one question that's already come up for you. And they're asking about the EIDL threshold and what's the application process for that, for the new.
Okay, I love that you asked that, because boy, that is the hot question this morning. All right. So last night at about 9 o'clock, I got all kinds of questions about that. So SBA last week had modified some of the requirements and basically said, look, we are going to support business owners with not 6 months of working capital support. That's what the original EIDL loan was able to do. It was basically half a year of support. This pandemic has lasted longer than anybody anticipated, really. So they're now extending that to 24 months of support. Okay. So just to put that into context for you, all those EIDL loans that were out there, okay, that were given 6 months support, now they're coming back and they're saying, I'm going to give you 4 times that, up to a maximum of $500,000. There's no new application. You're just having to wait for an email from SBA, and they're doing this in waves, okay? And this is what I got the emails on last night and this morning. People are getting the emails and they're wondering, is this real? Is the government really trying to give me money? And the answer is yes, the government is trying to give you money. There's no new forms for you to fill out. And it's rolling to those industries that have been hardest hit again, right? And so if you get that email, you're to reply back and reopen that case, and you could potentially see the government modify your loan. So just figure what you received, right? The original amount, which was 6 months, multiply that by 4, subtract out what you've already received, and that would be potentially the difference that you'd qualify for, if you were able to qualify for it.
Thank you. That answers that question. And also for the idle open of the open of new applications for all business owners. Is it open for all new applicants for business owners? And the second part is if they didn't receive the idle previously.
All right, so the answer is yes, it is out there. You can access the EIDL application as a brand new recipient or application borrower, right? Now, if you've already done that, if you've been through that process, you don't want to do that again, okay? And very few people have not done that yet, all right? Very, very few. We could probably count them on our hands and toes. Most people have gone through the application process. So what they're calling you to do is to keep using the original application or EIDL number if you've gone through the process already. Because otherwise, if you go in and put a new application in, it's going to cancel out. All right, they're going to match the EIN, they're going to match that name, and they're going to send you an email saying that we see you've already applied. We're going to take the new application and get rid of it. And they're going to delete it off the system. So they're forcing you to keep up with the original application and that conversation.
Great. Well, thank you so much. We do appreciate it very much, Rebecca. As always, you're absolutely knowledgeable in this area above and beyond. Just a couple of quick things here. If there's no other questions, I don't see any at the moment. Do you have any other comments you'd like to make closing before I give us a couple of notes for the end?
Yeah, it looks like Lori asked another question about
There we
PPP
go.
lenders.
Go ahead. Is there a list of PPP lenders available on the SBA website or another place?
Yeah, SBA does make a list of PPP lenders. They do it in a very smart way, right? You go in and you look for lender link, LINC, okay, link, as well as lender match. And SBA is always trying to match borrowers with the right SBA lender, right? And so that little conversation there, you put in your contact details, where you are, and it'll spit back lenders that are approved by SBA that can start working with you. And so that's the easiest way to find an eligible lender.
Fantastic. Any other last minute questions? Well, we do want to be respectful of your time. Thank you again. Are lenders making PPP loans to non-clients?
All right, some lenders are. That's a good conversation. Some lenders will not and haven't this whole time. They don't see that as fruitful opportunity for them. What we're seeing right now is a lot of the fintech lenders, so financial technology, and one that I like that has been really responsive to business owners that haven't gotten a really strong relationship and they're going through this PPP conversation. It's called Cross River Bank. Cross River Bank, one word, Cross River, second word bank. And it's Eastern Union is what'll come up on the Google search, but very easy to use. You can get through the application in 10 minutes. It's especially if you've taken this class and you know how to read your forms, right? Which forms you need to look at and how to calculate that payroll. You would essentially just upload that same payroll information with your simple application. And I've been seeing them process applications between 4 and 8 days, which is actually good in today's environment, by the way.
Very good. Okay. Well, thank you again. And you did say that there may be and probably will be more updates. Just to remind everybody real quick, you will be coming back on May 4th, I believe, for the
Yes.
latest updates for the next. And well, I was about to just take that. There we go. So everybody can see the upcoming. We have e-commerce coming up on the 14th as well this month. Why, and that's by Mark Wilson. We have Why is Communication Always a Problem by Lorna Kibbe. And also on April 27th, we'll be leveraging LinkedIn for business growth with Marsha Hudson and Fulfillment 2021 with Mark Wilson. Listening, that thing we don't want to hear about. Lorna Kibbe coming back as well. And then, of course, we look forward to May 4th. As I just mentioned with Rebecca Schultz again, please go to the website of sbdc.nctc.edu for more information regarding it, as we're always giving out resources. Remember, these resources come to you at no charge. And of course, we want to thank just a couple of people, of course, the Small Business Administration, the state of Texas, North Texas SBDC Regional Office, and North Central Texas College, of course. We want to thank you all for joining us today. Thank you so much, Rebecca, again, and we look forward to seeing all of you next time. This will end and conclude our webinar. Thank you for coming.
Thank you guys. Thank you so much.